Are you a business owner? What sneak up on you? Every one of you is the March 15 deadline. If you are a business filing as a partnership, as corporation, or your tax season move faster than everyone else, your return is due a full month earlier than the individual deadline. So in this video, we are breaking down exactly what it means for you, what changed under the new big beautiful tax bill, and what your CPA need right now to keep your return clean, accurate, and penalty free. So we are going to do step by step through 6 main parts, so you always know where we are and what's coming next. So here what we're gonna cover in part 1, who does deadline apply to, and what it really mean. Part 2, what's new under the big beautiful tax bill, and then part 3, what to send your CPA before mid-February. Part 4, smart tax move before year-end 2025. Part 5, what happened if you are not ready. Part 6, the quick recap and takeaway for you. So let's start with part 1. Who does it apply to? It's you. You run a business like a partnership or an S corporation. Your tax clock run ahead of everyone else. So March 15, 2026 is your official due date. So that means Form 1065 for partnership or multi-member LLCs, or Form 1120S for S corporation. Both need to be filed by that date. And if that date sounds far away, it really isn't. It's about 4 to 6 weeks before most individuals even start thinking about filing. So now if you are not ready, you can file an extension. Your extension is different than the individual extension, right? So if you want to do that, you want to make sure you be clear with your CPA. So Form 7004, which give you until September 15, 26. But here's the catch. An extension only gives you more time to file, not time to pay. Remember that. You still need to pay any tax owed and issue K1 to your partners or shareholder on time. So if those K1 are late, the penalty is steep. So $310 per K1 per month. So part 1 is about awareness. We cover that. So if you're a business, partnership, or S corporation, your timeline start now. So we know who this affects and why it matters. So let's move into what's new. So part 2 is where we cover the big beautiful tax bill changes, the landscape for 2025 business return. So these are the provisions that could save you thousands only if you know what to apply them and how to apply it. And especially you are the business owner, you need to know what they are, so you can talk to your tax pro about it. So don't completely rely on your tax pro for everything. So for small business return, this bill, this act, impacted in 8 different ways. So I'm gonna take them one by one and explain to them what they are. So first, most important, the 100% bonus depreciation. It's back, and then business can again write off the entire cost of qualifying assets. So you think like computer, equipment, vehicle, furniture, but remember they have to be placed in service after January 1925. So it's the huge deal, right? If you plan to invest in your business, you can get the cash back right away instead of waiting a long time for the slow depreciation to take effect. The second thing that you want to pay attention to is Section 168N, which allows you the full expansion on qualified production property. So if you are in manufacturing, farming, or refining, this is for you. So it lets you fully expand qualified production property that play in service after July 4, 2025 through 30. It's not forever. There's a time limit, so until 2030, yeah? And the third thing is the Section 179 limit are higher now, so the deductions limit jumped to 2.5 million, and the phase out begin at 4 million, starting with tax year beginning after December 31st, 24, which means your tax year 25 does apply. So this gives small business owner even more flexibility to expand capital purchase upfront instead of depreciating over several years. 4, the R&D expenses is back. So before you had to spread out research and software development costs over 5 years. So now under Section 174E, you can deduct them right away, again, starting with 25 tax year. There's a cash flow win for everyone developing new product system or apps. 5th, the qualified business income deduction, so Section 1998, which is now permanent, that 20% deduction, yay, for pass-through income that isn't going away anymore. So beginning in 2026, the income phase out will adjust for inflation. So this really helps you keep your tax bracket intact as your business income grows. 6th, the excess business loss limitation under Section 461I is now permanent and indexed. So that means if your business have a big loss, you can still use part of it and carry forward the rest. So the threshold will now rise each year with inflation starting in 2026. 7, residential construction contracts now get more flexibility. So under Section 460E, the exception from percentage of completion accounting now apply to residential construction, not just home construction. And the time window extends from 2 to 3 years. So that change applied to contract enter into after July 4, 2025. So this giving builder more breathing room, a little bit more relaxing. And finally, partnership payments under Section 707A2 are getting stricter. Any payment to a partner or services or property is now automatically treated as non-partner transaction. In short, no more wiggle room on disguised sales. So this applies to services or property provided after July 4, 2025. And one more reminder for S Corporation, the IRS is still laser focused on reasonable compensation. Even though the law didn't change here, the audit hasn't stopped. So make sure your officer's salary is documented and backed up by your payroll records before year end. So those are the 8 items that some key changes under the new law. So if you are keeping score, these updates can help affect how you depreciate and report income for tax year 2025 and beyond. So you know what the new rule is. So let's talk about what actually you can do with them now, right? So part 3 is about what your CPA needs from you, like the practical stuff, what you should send in mid-February or earlier, please. So this is the checklist to keep your return accurate and keep your CPA happy. So to make sure your business return files smoothly, you want to gather these documents early. Think of it like a January or February prep checklist. So usually what CPA is going to ask for, right? Your 2025 profit and loss statement, balance sheet, bank and credit card statement through December 31st, if your calendar year, if your fiscal year worked out that for your period. And then payroll reports and W-2 for you and any employee. 1099 next form for contractor list. And remember, for 1099 next, the threshold for tax year 2025 hasn't increased, so it's still at 600. But the year after, so when you get into tax year 2026, the threshold gonna go up to $2,000. But remember, tax year 2025 is still the old threshold. So I know this is kind of like a challenging year when you have the big beautiful tax bill with all these updated, and when it applies, it also matters. So sometimes we do the whole series and all these kind of updates. So I think a couple weeks ago we was covering the 1099 next filing deadline for the end of January. So take a look at that if you are in doubt. And moving on with this video topic, so are your fixed assets invoices or loan document for any major purchases during the tax year? This is what your CPA is gonna wanna have. And all your loan statements showing year-end principal and interest, and of course also the beginning balance of the year, right? Because your CPA wanna match it up with the last year tax return. And then your mileage, home office, and accountable plan log. And your basic schedule for partner to a shareholder. You want to record any draw, dividends, or distribution. So if your ownership structure changed or you elected as corporation status, don't forget Form 2553 and your updated operating agreement. So your CPA will need these to properly allocate income, expenses, and ownership, especially under the new basis and loss tracking rules. And just by sending everything early, you are buying yourself time to review and fix any bookkeeping errors before the deadline rush. Remember, your CPA is also very busy like you or your tax pro, so you want to get these in early so they have time to go through that in more depth. So far we covered the who, the what, right, and the paperwork. So now let's talk strategy. So let's move on to part 4 where we focus on the year-end tax strategy that you can do, right? So what would make a difference before December 31st ending? So these are proactive steps that you can actually lower your tax bill. So first, you want to review your owner payroll and distribution. You are an S corp, check whether your salary is reasonable and balanced with your distribution. So that helps you stay compliant, and then you also help you to optimize your QBR deduction too. And then second, you want to think about maximize retirement contributions, right? Because SEP IRA, solo, 401ks, and employer plan can be funded up to your filing deadline. If some of these, if you file for extension, it's also up to that extension. So like say, like SEP IRA, if you do extension and then you actually have until now we kind of somewhat cross path into individual, right? Because SEP is something that you would deduct on your individual return. So if you file extension for individual, that deadline to finish your extended return is October 15. So if you do extension, then you still have until October 15 to contribute to SEP IRA for that tax year. Like say you have until October 15, 26 for tax year 2025 if you file an extension, yeah? So some of these are still very powerful even though you already in February already. So if cash is tight now and you still have time to contribute, and you can still get the deduction, right, later. So also third, you want to prepay deductible state or GE tax before December 31st, assuming that you can still, before December 31st, if you're on a cash basis. So that is simple, but it can help you plan your expenses and plan your deduction, right? Fourth, important, you want to remember to document your related party transaction. So if you rent property from yourself or you reimburse for mileage or share expenses between entities, make sure that everything is written down and at arm's length. So those are red flags area in audit. So documentation is your best defense. So these 4 moves can make a real difference, and then they're easily to implement right before year end. Now, what if you are behind? Okay, so your book aren't done. So your CPA your tax pro is super busy, and March 15 is creeping closer. Don't panic. So this is part 5. So what if you're not ready? Then what should you do, right? By late February, you want to go ahead and file an extension. So for partnership and S corporation, the extension form is form 7004. So that gives you until September 15, 26 to complete your filing. But remember that extension doesn't stop penalty for late payment or late K1s. You still have to issue K1 on time, and the penalty is $310 per month for each one that's late. So if you need more time, take it, but stay compliant by paying any balance due and keeping those K1s out before deadline. Let's move on to part 6. So we already cover who need to file, what change, what your tax pro need, how to plan, and what to do if you're running so let's do a quick recap. So So some key summarize here for your 25 tax year. No 25 return, yeah, business return. So remember, 100% bonus depreciation is back and now permanent until Congress changes it. So Section 179 limit is raised to 2.5 million and then phased out at 4 million. R&D expensing is restored for 25 and beyond. QBI deduction are now permanent and indexed for inflation. Access business lot limit now permanent and indexed. Residential construction rules modernized with a 3-year window. Partnership payment rule tightened for disguised sales. March 15 remains your hard filing deadline. So if you are take away one thing, just one thing, then don't wait until March. You want to start preparing your records now. The big beautiful tax bill gives businesses more opportunity, but only if you act early and stay organized. And also remember, you want to communicate with your tax pro early, being proactive. That will help you save money, time, and stress. You want to file clean, file early, and take advantage of every deduction that you can. Thank you for watching. This is Mia from Small Business Accounting, Inc., helping you stay compliant, confident, and ready for 2025 tax filing season.